And good evening. Welcome back to the Junior Small P channel. We'll be going live here in a moment. Got a live view here of tomorrow's trading. Some movement with gold. We'll talk about that. We'll just kind of look at this chart for a minute or two while we let the audience fill in. There's nobody here yet. So this is when I feel the most crazy. Welcome back to the most boring channel on YouTube, the Junior Small P channel, where you will find the extemporaneous ramblings of a madman broadcast from his bunker, as well as his crazy wife. She happens to be taking a nap, so we'll try not to be too loud. She's tired. She worked today, wasn't feeling the best, so she's now sleeping with a kitty on the couch. And I was going to cover a few stories this evening, talk about gold, our favorite money, the only money, the real money, the precious metal, the archaic and barbarous relic. We're also going to touch on a gold bear. I think one of them came out of hibernation. So we're going to talk about that. Carlos Danger, you're in the chat, my friend. Don't forget to hit the like, hit the share so we can grow the audience here. We'll get this video out there and hopefully get some lively discussion in the comments. So as you're sitting there, Carlos, it's just you and me. You're the only one in the chat so far. As the viewership grows, we will get into the meat and potatoes. We'll get into the material. So just bear with me as I get the stream ready. Forget to hit the like. Oh, there it is. So we can grow the reverb. Here. There we go. I've got to get everything set up as I get the stories pulled up. So just bear with me. So far there's 11 of you here. Good. All right, almost ready here. Like I've told you in the past, it's different now. Ever since YouTube made their new system and their new rules, you can't notify people that a live's about to come. It just, you have to kind of go with it on the fly. So there we go. Looks like we've got Silver Ripples. He is in the house as well. And then Dazed and Confused Stacker. Awesome. So we're growing. We got a few of you in here. Got 14 now watching. We've got some interesting material to cover. So I think you guys are going to have fun tonight. We're looking at gold. Looking at a gold chart, obviously. Let's zoom out a little bit. It looks pretty tight. Look at this trading. You know, I'm not a big chart guy, but sometimes there are things you can look for. Like, you know, a big dip like this, where they knocked out some stop losses, kick some people out. Of course, this is all paper contract garbage, but it gives you an idea what they're doing. And then it's getting pretty tight out here. We'll see what it does tomorrow, if it's going to pop up, open up here, and regain that 1800 mark. We're also going to talk about Turkey today, because oftentimes with those small economies, other parts of the world, there's certain economic rules and principles and laws that take place that carry across the board. They're the same things that will affect other nations and other economies. You just have to give it time and wait for the right circumstances to arise. So let's check it out here. We're going to go into the Turkey news as well, but real quick, we'll talk about gold. As you know, recently, we covered this. There was a pretty brutal couple of days there for gold, as you can see. You can see right here. There it is. And that plunge in the price dropped it down into the 1770s range. Still, we are up significantly, as I will show you in a moment. Let's go to right here. We've fallen about 180. I think it was down 250 from the high, but 108 in the last 30 days in dollars. However, the last 6 months, we're still up $46, up 2.6%. And 1 year, we're coming up to about a full year now almost. It's still up $324, up 22% for the year, as you can see right there. Still 22% for the year. Not bad for people that are just trying to hedge and protect their wealth, trying not to lose. Still averaging 10.4% per year. 2020 has so far on this chart to this date. Now this is not going back a full year. This is just going back to January 1 of 2020. So for just this year, we're still sitting up about 17.6%. I think it's going to increase a little bit, at least to get back into this range. as you can see some of the averages here. But still, 17.6 is good. There's definitely some things taking place in the economy that make these uncertain times even that more uncertain compared to times in the past. This is a different era. 2020 is like no year we have, any of us, I think, have ever been through or lived through, regardless of how much of it's contrived, orchestrated. The architects behind all of this, they have their plans and their schemes. Another hello to Bill Spencer, who's in the chat. Welcome, Bill. Glad you're here this evening as well. I think you're going to have a fun time. We've got a couple of interesting stories. It's not going to be one of those really long lives. Tonight it's going to be just the few stories I wanted to talk about when I was reading some news and digesting gold material. So let's just get to the first one, the main one, because it's the one that I think we can take the most lessons out of. It's things like this that we can look at, and it usually reaffirms the reasons people are stacking, gives us that little bit of motivation we might need, especially at times like this when it's looking like it's going down a little bit. Which, again, you know me. The only reason I look at these charts ever, or the price, is for you on the other side of the blue snowball microphone. I don't really care what the daily price is on gold, or I don't even care what the weekly or the monthly price is. So let's get into the Turkey part, and then we will go. It's funny, we're talking about Turkey, and we just had Thanksgiving, but we're going to go to the country of Turkey, the nation of Turkey, not the bird. And then we'll talk about the gold bear, the only one that I've seen so far. And when we get to that article, you're going to say, well, wait a minute. Is he really a gold bear when he says that? And you'll see what he says, because it's not a very bearish thing. I was actually surprised by some of the things that I read from our friend Dent and Head Harry. So let's get right to it. This is the Turkey story I wanted to share with you all. It's from the 26th, so it's a couple days old, not too much. Nice, beautiful view of a gold bar there. Turkey has no cure for a gold craze that leaves the lira vulnerable. Now, this is an interesting piece of material because, as you know, we've talked about what's been going on in Turkey. We've covered it briefly here in a few stories. As you know, they've had some economic troubles, a lot of difficulty stabilizing their currency, the lira. It was having some serious problems, teetering on massive inflation, and just an unhealthy situation for the savers and those that transact with that currency in that country. But let's get into this here. A year of crisis for the lira has kept Turks buying gold at a record pace. Now, the appetite for more bullion risks becoming a drag on the currency just as a rally struggles to regain momentum. In the 2 weeks after President Recep Tayyip Erdogan cleared out the leadership ranks blamed for failing to stabilize the lira and draining reserves, Turkish retail investors and firms added $2.2 billion to their gold holdings, taking them to $36.4 billion, or almost triple the total last year, central bank data showed. So what does that mean? Just in the past 2 weeks, it looks like the Turks, the retail investors and firms, stacked up and added $2.2 billion of gold to their holdings, taking them to having now $36.4 billion, which is triple the total for last year. So it looks like the Turks are stacking. Now, either the Turks are tuned in right now, and if you are, give a shout out, Turkey. Welcome to the channel. Glad to have some Turks on board here. However, just to remind you, Turks, it is Constantinople, and it is my effort and goal to one day return it to such glory. Obviously, I'm not going to do that, and I can't. But I just happen to side with Constantinople on that. Turks aren't relenting in their zeal to own gold despite a historic turnaround in the lira and this month's decline in bullion prices. But with gold imports now accounting for most of the current account deficit, the purchases are getting in the way of mending Turkey's external imbalances, even as authorities increasingly adopt the market-friendly approach that foreign investors crave. And here's a little chart here, if you can see it. Hoarding gold, Turks' precious metal deposits more than doubled in 2020. man, these people, they know what's up. They know what to do. Hey, the currency's deteriorating. The lira's going to crap. What are we going to do as a people? What do they do? What's the instinct? What do all humans do? Every economy, every single time. This is a lesson for you out there who are stacking. I'm telling you right now, this doesn't change. Doesn't matter if this is the UK, Germany, anywhere in the Euro, the EU. Doesn't matter if it's in Canada, the United States, Australia, or New Zealand, Russia, China, Korea, Vietnam. This is what people do when the currencies deteriorate and start to fall apart. These are the moves they make. And as you can see here, hoarding gold, Turks precious metal deposits more than doubled in 2020 so far. And there you can see it. Look at that. Look at this chart. Look at it just going up. Billions and billions and billions in gold as they accumulate gold, the people of Turkey. We see steady demand from local investors for gold, even at higher than world prices. These people are paying higher likely than you and I are because of the demand for gold in their country. Now, pardon me, I know the chat's going off. There's a lot of comments rolling by, but I can't see them when I'm doing the stories. And I don't have Mrs. Maltby here because she's taking a nap. So I don't have someone to poke me on the shoulder or tell me that you guys are talking about something specifically. So if you do have a question or something you want to raise, an issue, I promise you we will get to them at the end of the video. So stick around. You can raise your hand or you can throw down a super chat and I'll definitely see your name and I will call on you and we will discuss the item that you wish to have discussed. But let's finish up today's stories. So we're going to read this part again. We see steady demand from local investors for gold, even at higher than world prices. I think that's staggering. Higher than world prices. I don't know what those are. I don't know what they're paying, but it sounds to me in reading this that these people are essentially paying whatever they have to, whatever they need to in order to acquire physical gold. Unattractive deposit rates and the lack of trust in the lira. So just swap the word out lira with whatever currency you have to use. Dollar, euro, yen, renminbi, pound, ruble. Think about it for a minute. Unattractive deposit rates and the lack of trust in the fill-in-the-blank currency are the main reasons driving the demand. Okay, again, like I've told you, this is not going to change just because you're not in Turkey. This could easily affect you where you are. And with the way the world economy is going, the geopolitical risks, the global economy at a very precipitous moment, a very dangerous time. I mean, do I have to remind you, this is the worst it's been in the UK since the Great Frost of 1709, as we covered the other night. I mean, the UK is facing dire circumstances, economically speaking, and it's not going to stop there. It's not just the United Kingdom. This is in the United States. This is in Canada, Australia. This is everywhere. This is probably, well, it's probably the worst it's been in my lifetime. I can be honest with you and say that. I really do believe that it is. So again, unattractive deposit rates. That's the same thing everywhere. Look at the interest rates in all the banks. The lack of trust in the currencies. This is the reason many people are fleeing their native currencies and putting money into other places. Now, either they're taking high risk with it and putting it in the markets, the equities markets, which you know some people are doing that, or they are entirely trying to escape out of the native currencies and move into other vehicles, such as gold and silver, or the crypto world, cryptocurrencies. It is happening. We're seeing it, and that's part of the drive, I do believe, in what we're seeing is this increase in volume and market cap for those various markets, especially being crypto. And we covered that recently. We talked about market cap just to kind of help give us all an understanding, a foundation of what is the market cap of all of these different areas of the world economy. And it's something to consider when you're looking at these numbers and these movements. But again, I think this little paragraph here, I know we're spending a lot of time on it, is quite important to break down. Unattractive deposit rates. Okay, what is the crowd doing? What are the herds doing? What are the people doing? Well, look up here. They're putting money into gold. The lack of trust in that native currency, lira, they're putting money into gold. It's an escape hatch. It's a lifeboat. And it's something that people inherently turn to during times like this. Okay, said Debunking Kaycek, business development executive at Troy Precious Metals in Istanbul. or formerly Constantinople. A retreat in global gold prices is also seen as an opportunity for those who think gold's story is far from being over. I could spend an evening, well, I'm spending an evening with all of you. I could spend an evening on that one line. A retreat in global gold prices. Now, what are we saying? What did we just talk about? What did we open the video with? A retreat in global gold prices? A pause? A fire sale, if you will? Or as some of you like to term it, I've read it before, backing up the truck. Yeah, this is when you take out the forklift and you drive it yourself over to J.M. Bullion and you say, I'd like a pallet of London Good delivery bars, please. Obviously, none of us can afford that, but if you could, this would be that moment where you'd say, you know what, I'd like a monster box. Hit me with 500 ounces of gold. Hit me. Hit me. Hit me. It reminds me, for the first time in my life, ever. Of course, I'm all over the place here. I get scattered. First time ever, I watched One Flew Over the Cuckoo's Nest. Now, don't judge me. I usually watch a lot of good classics, and I try to be a man of culture and enjoy the arts and theater. I had never seen the film One Flew Over the Cuckoo's Nest, and the other night we were scrolling through, picking out a movie to watch, and Mrs. Maltby, I had told her I'd never seen it because we just skipped past it. She immediately went back to it. We watched it, and I thought, wow, it was a really good movie. It was very enjoyable, and that just reminded me when they're playing cards. Yeah, the one guy keeps saying, "Hit me, hit me." It was a good movie. If you haven't seen it, it's a classic. Check it out. I can't believe it took me so long in my life to watch that movie. Very enjoyable. But again, let's get back to the story here. A retreat in global gold prices is seen as an opportunity for those who think gold's story is far from being over. Now, that's a great point. I think most of us, when we look at gold prices and when we look at gold, if you are one of those like myself that has an ideological affinity for gold, then you look at it as people look at gold either one of two ways and think at times like this. Either they get very bearish and they think, oh, it's over, gold's going down, it's going back to 700, it's going back to 1,000. We'll talk about that in a minute. We'll pull up a story, so just bear with me on this. Or they go, this is just a temporary retreat. They look at the charts, they look at what's actually taking place. They realize the fundamentals haven't changed, the facts still exist, the debt's still there, the currency's still deteriorating. We have a new administration coming in that's only going to debase and devalue the dollar further. And of course, they look at it and they go, what? You know what? Gold's story is far from being over. And they just accumulate more. Now, this gives me some hope for Turkey. I'll tell you right now, these people know what's going on. And they're accumulating gold because of it. They are putting away, dynastic wealth preservation for their people. And they're taking up a position to better be prepared and to better approach the coming economic storm that's going to sweep across the world stage. Now, Turkey is one of the biggest consumers of the precious metal worldwide. Turks use gold as protection during times of currency devaluation and inflation, and traditionally gift it for events from weddings to circumcision ceremonies. Now, I think that's Turkey using it for protection during times of currency devaluation and inflation. Again, you could replace any nation with that, any people. This is not specific to Turkey. Like I said earlier, whether it's in the Far East, whether it's anywhere in Europe, anywhere in North America, people essentially view gold the same way. Now, some cultures might value it a little bit differently, but I'm going to tell you, those things that we're covering right now that we just talked about, when we talked about the unattractive deposit rates, when we look at the lack of trust in a native currency, when we look at protection for times of currency devaluation and inflation, those people will ultimately turn towards gold. And that's what the Turks are doing. Now, this is why, again, you have to look at this as almost like a microcosm, or it's a lesson that we can learn from. This is something to actually gain a little bit of wisdom out of. What's that old saying? A smart man learns from his mistakes. A wise man learns from the mistakes of others. It's kind of the opposite here. We're not going to learn from the mistakes of the Turks. Well, we could, I guess, when it comes to how to handle a currency and what not to do to destroy a currency. However, the nations we all reside in, are doing the same things just tenfold or 1,000-fold. The currencies in these nations, our native currencies, mine, the dollar, is being driven to the ground and destroyed, likely far worse than Erdogan and his regime is destroying theirs. They just don't get away with it as much because they don't have, the lira is not the reserve currency. They don't have the nukes and the military-industrial complex to prop up the lira like we do the dollar, although the dollar's day is coming. Theirs is more of a lesson to learn from on what to do. Learn from their right decision, not from their mistake. This is a good decision these people are making. Gold fixation. When it comes to gold, local habits are proving hard to break. I don't know why they would want to break them. Even after the lira soared more than 10% in the week following the ouster of the central bank governor and the resignation of Erdogan's son-in-law as finance minister, the currency has grown less steady in recent days. However, even after the central bank raised interest rates by the most in over 2 years and took other measures to cool a lending boom. Turkey's currency has lost 25% this year, making it the second worst performer in emerging markets after the Argentinian peso. While gold slipped in November after dropping for 3 straight months, it's still up about 19% this year after reaching a record in August. Combined with declines in the lira, the precious metal provided better returns for local investors than bonds or Turkey's benchmark index of stocks. Haven hit. Gold drops to a 4-month low on virus progress. Biden transition. You can see it right here. Yes. This whole thing where you keep seeing headlines about the price of gold dropping because of situations regarding the virus, I'm not buying it. I'm sorry. I will not buy that story. Gold is not dropping because of, now they're telling us this, but it's not dropping because of virus stuff or because of some vaccine coming out. They're shuffling stuff around, okay? This is paper gold, ETF gold. I think the large banks, the biggest institutions, are actually trying to take up a better position in gold. There's some things taking place, some shady stuff. I don't know if you guys believe in all of that. If you guys have your little tinfoil hats on. But I do believe that there's a strong chance that major institutions and players are trying to take larger positions in gold and they don't want to be left behind. So they're trying to kind of pause its incline. They saw what took place. They saw some price movement that quite frankly scared them. They became a little bit frightened when they saw gold hit that 2,000. That sent shockwaves and shivers through the economic machine. And, well, they took a moment of pause. They realized maybe they need to take a bigger position in gold with things that are about to take place going forward. And so here we are with some nice discounted gold prices as these, and just follow them. Just do what they're taking big positions. I can almost assure you. There's buyers on every end of this trade. So when the gold's getting dumped, there's somebody there buying it. You just got to wonder who's buying it when they're dumping it. Well, it's the guys, probably them. They sell it at the front door, they buy it in the back door. Regular Turks aren't alone in finding solace in bullion. The central bank is also continuing to accumulate gold reserves, bringing its holdings to an all-time high last month. Turkey's gold imports are on track for the most since 2017, according to Borsa Istanbul data. Given that foreign investors remain wary of Turkish assets, the challenge for Erdogan and his new economy team is to wean people off of gold in the hope of inspiring enough confidence in the lira. Good luck with that. You're not going to shake these people loose. You remember the old saying, fool me once, shame on you, fool me twice, shame on me. They're not going to, and if I said it like Bush, I know I'd screw it up. Fool me once, shame on me, fool me twice, well, you're not going to fool me again. You're not going to fool them again. These people saw it. They know that things are shaky. They know they're dicey. They're not going to dump their gold and get some paper fiat, unbacked trash paper coupon, some monopoly note, and trust it. They've lost trust. The lira has lost the trust of the people. It's going to be very difficult to earn that back. It doesn't come back. When you trash a currency, when it starts to die, once the people forsake it, once they start to abandon it, It's a very difficult ship to right, and the momentum of that pendulum is not going to go in the other direction anytime soon. It's just not going to happen. Given that foreign investors remain wary of Turkish assets, challenge for Erdogan, hoping the lira, not going to happen. Demanding gold means demanding the foreign exchange to buy it, said Evren Kirikoglu, an independent market strategist in Istanbul. It's one of the obstacles ahead for the lira's appreciation. And the lira is not going, I don't think they're going to be able to right this ship, honestly. I think you're going to continue to see significant investment in gold there with those that hold lira. They're going to start dumping their lira, and they're going to continue to take positions in gold, especially because if these people are reading the news, and I'm sure they probably have better access to better information than here in America, and your average American doesn't pay attention to economics at all, let me tell you. I live with them, I know them, I see them, I talk to them. You pass them on the street, you work with them. These people do not know how it works. They're not paying attention, they're not reading it, they don't care, it's too boring. That's it. That's really the summary of that. They don't care enough, and they're not going to pay attention to it. And by time most average people wake up and realize that they should be taking a position in gold, that ship has sailed. It's too late. The price is already prohibitive, and they're not going to be able to acquire a position in it like they could have before if they'd been paying attention. Again, I still think we're very early in this. This is the very beginning stages of the multi-decade bull run we like to talk about with gold. Now, I'm not a financial advisor, I'm not an expert, I'm not even an economist. But when you look at the reality, the facts on the ground, when you look at the data, what's actually taking place, the numbers, the mathematics that are behind all of this, and you read the people that do know, the professors that I respect, the people that do have the title of economist, well, the right ones tend to hit the nail on the head and paint somewhat of a bleak picture of where we might be headed and where the economy is going and why it's wise to take positions outside of your native currencies, your fiat, your trash paper. So keep that in mind. Let's look at Turkey as a lesson, as a good lesson, as something to glean something from and to perhaps follow in their footsteps. Let's look at what the Turkish people are doing. What are they doing? They're buying billions of dollars worth of gold because their currency's falling apart. So that's the lesson tonight coming to us from Turkey. This is a Bloomberg News story from November 26th, 2020. So fairly recent. Now, where's my other story? This is the one. This is the one. You guys will get a laugh out of this one. I did. Harry Dent came back. He looks a little pale. I think he's just came out of hibernation. That's where the bears have been. As you know, the gold bears, I did a video a couple months ago, where have all the gold bears gone? Well, they went into hibernation. They kind of hid out when gold was getting pretty hot there. And we hadn't heard from them for a while. And I knew they'd come out. It's like putting a stinky can of bait out, or a carcass, some rotting apples or something. You put enough out there, which is like a good $200 drop in the gold price, and these guys come crawling out of their little caves, pale, famished, a little gaunt, a little baggy under the eyes, and they'll come out with their bearish positions on gold. So Harry Dent, I wish we could pull up his resume right now, his track record on gold predictions, because as you know, he's the one that for the last 3 years has been claiming gold's going to drop. It should have dropped back down to 7 every year, 700, 800, 500. These just ridiculous bearish outlooks on gold. And every time he's been calling for $500 or $700 gold, it's done the exact opposite. It just climbs up out of there. It's never gone below 1,000 ever since it crossed that mark. It never even went below, I think, 1,080 or I think 1,070 or somewhere in that range, or 1,100. That was the low. Now this is there was a 2-part video thing here with his interview. He's calling for gold prices to fall to $1,000 before the strongest boom in history. So is he really a gold bear when he's actually calling for the strongest boom in history? Now I could play the video here, but I don't know if I guess I could. You guys want to hear it? Let's play it. Let's see if it plays.
To the next segment of our interview, part 2, gold. Harry, I know you have lots of views on gold. You have said in prior media appearances you don't hate gold. You're not a gold bug either. You saw gold falling this year. Well, it's risen, now it's falling. So what's your sentiment now?
Okay.
He came out because it's
follows two things. It is the closest correlation with inflation. Long term, it only correlates with inflation. Okay, and inflation peaked in 1980, and it's going to go down and keep going down in developed countries. Okay, so that's going good. It also follows the 30-year commodity cycle, peaked in 1920, 1949 to 51, a double peak, and then 1980, and now here again a double peak in mid 2008 and late mid 2011. Gold peaked on the second one. So gold peaked there, came down. Now all this stimulus. Gold rallies with this stimulus up to a point because they assume it's going to cause growth and inflation again, because gold primarily correlates with inflation more than anything else. I see gold, I predicted it would crash. It broke 1525, it crashed down to 1050. When it hit there, I said, gold now is oversold, due for a bounce with all this money printing. And now...
Back then, yeah, it stopped at 1,050, but he was calling for it. If you recall, and you look back at his actual predictions, the guy was calling it for it to smash down to 750, I think, $700 and $800 range.
I'm predicting gold will probably, watch what's just happened. In 2008, gold continued to go up when stocks went down, sensing a crisis, money printing, stimulus, which it loves, okay? And in the February-March crash, gold went up in the first 2 weeks of that 5-week crash, went down in the middle of it and came back a bit. Gold ended up down, but not that much. I'm expecting gold to go up into when this crisis starts to build next year. It's going to see more stimulus. It's going to go up at first. I have a target of 2,200. That goes through the tops in gold all the way 1980 in 2011. 2,200 is the strong resistance in the coming months. I think gold's going to go up to 200 at first and then crash back down to its 2015 lows around 1,000. And from 2022 on, I'd be buying gold hand and fist. It's going to hold up better than most commodities. And gold.
Did you guys hear that? Harry Dent just said in 2022 he'd be buying gold hand over fist. And we're gonna watch this video together a little bit. I gotta pause it every now and then to interject some stuff. He's saying that he thinks it's going to drop because he doesn't think right now inflation is going to be that big a deal from all the stimulus they just cranked out. The $3 trillion, plus the extra trillions that they're going to punch in after Biden gets in there, as you know. And I honestly think he's got an unnatural amount of faith in the system and a very unnatural amount of faith in the strength of the dollar. Again, he doesn't realize, maybe he does, the amount of fuzzy numbers that they put out there when it comes to inflation numbers from the government. They try to keep that down. It's like this. It's like the worst information they can release out there is what the true and real inflation is and what's happening with the strength of the currency. So his calls for gold to rise again this year, hit 2,200 and then smash back down to 1,000. I think that's highly inaccurate. Again, when I look at his calls in the past as being as wrong as they were, I'm not going to discount everything he says because of that. I think there might be some little bits of pearls in here when it comes to things, and there might be other parts of what he says that he could be wrong on. Yes, I think gold is going to return to the 2,200 that we saw. There might be another correction, a little bit off of that, but I don't think it's going to slow down. I think it's going to be part of. I think if it retests that 2,200 again a second time, there's a very strong possibility it's going to smash past it. And I think there's going to be a lot of tailwinds on it, pushing it even further. I think that the economy is in a much more precarious situation. I don't think that we can really compare it to 2008 as much, especially when you look at the Fed and the Treasury, the deals that they've been making, the amount of stimulus that's out there, and where the money's going this time. The big difference between 2008 and now, this money, the velocity of money that's being cranked out, the stimulus, the quantitative easing, is entering the economy. It is being spent, and it will result, I believe, it will result in inflation. And as you know, it takes a little bit of time for those prices to react. And it does take time for, of course, all that money that's in the form of stimulus and quantitative easing and such to percolate through the economy and cause price changes. I think that the main rise in gold we saw based on the idea of the stimuluses we saw this year was just the beginning. Once that money starts to really flow and the prices of commodities really genuinely react to the increase in the money supply, I think they're going to react even more than we saw previously. And that's why I think $2,200 gold will be just a benchmark. And it could be a new support level, and it could bounce between 2,200 and 3,000. But that's just me, the permabull of gold. So, don't take my word for it, of course. I don't know anything. That's just my idea. But let's continue on. Let's get it back to playing again.
Is loved by the people who are going to be driving the world economy, Asians, and especially Indians and Chinese, and especially Indians. Indians spend more per dollar of income on gold than anybody in the world.
It sounds like you are super long-term bullish on gold. Yeah. I mean, in the medium term, we're going to see
another 30-year commodity cycle, which bottoms around 2023, just happens to bottom when the demographics do. But more important, the rise of Asia, the whole growth coming out, no longer going to be Europe and North America. We do okay. Europe continues to lag. East Asia is going to lag. Southeast Asia and India are going to drive the next boom. And those people are going to be big consumers of gold in addition to all the other commodities.
So $1,000 is around the bottom for you?
Yes, around 2022. And then, who knows? Gold bugs are saying...
You guys, we got to screenshot this. Somebody has to take a note of this, please, because this is Harry Dent calling for $1,000 gold in 2022 next year. I don't... Oh, that's 2021's coming up. So 2 years from now. He's calling for $1,000 gold. I don't see that happening. I'm sorry. I do not agree, Dent. Harry Dent. I don't agree, my friend. I mean, I'm with him when it comes to buying gold hand over fist, but he's saying wait till 2022 for that. Because he says we're going to have this multi-decade low on commodity prices starting then. I think he's off by about a good 2 years. I think it's right now. I would be very surprised if this turns out the way he's talking.
And it'll go to 5,000. I say, yeah. I say, I agree with you when you're dead. So it'll be the next commodity cycle. Again, I'm a cycle guy. Yeah. I can tell you cycles on all types of... Next commodity cycle peaks between 2038 and 40. I will be close to dead, if not dead, by then.
Now, when he says he's a cycle guy and he's talking about this commodity cycle, when people refer to things like that, they're basing it on, again, past performance. And now past performance never, and past behaviors and cycles, that is no guarantee for future performance and future cycles. We're entering uncharted waters. These are unprecedented times. Things are entirely different now. Especially when you look back, Bretton Woods collapsed when they closed the gold window in 1971. So it's very difficult to just look at a 40-year window and come up with all kinds of elaborate cycles and chart schemes on it. So that is why I think it's when you talk about cycles like that, you're betting a lot on some pretty bizarre theories sometimes, and they don't always turn out. But let's continue. Again, I think we're going to see a cycle that doesn't really have a name, that can't be accurately categorized, that exists outside the norm. This is a new paradigm. This is like an outlier event or a once in a multi-generational economic event that we could be going into. So let's continue on.
So I'm just hoping I see gold at 5,000.
You said it's going to rise to 2,200 first, but what's going to take us there? Vaccine news has been clobbering gold prices for the last couple of weeks. And the vaccine's not even out yet, right? It's just news. What happens when it's actually out?
They don't want to see a recovering economy that needs less printing. Gold's been going up on money printing. That's been the biggest driver.
Agreed.
If the economy starts to weaken again, gold's going to say, see, just like 2008. Gold had a big run in 2008 forward when they started printing money hand over fist. So They're going to react to the money printing in the next round, probably in the first quarter, have their last thing. And again, what caused gold in 2008? It did the same thing. Money printing early on, crisis good. When the deflation set in, remember what I said earlier, gold correlates almost 100% with inflation.
I got to pause it again because there's a big difference. If you read about the differences between the 2008 crisis and now, the reason '08 had that deflationary crisis and such is they did not spend that money that was printed off as much. It did not enter the system. It did not go into the hands of the people like it is now. The money that's being lent now, the money, the stimulus that's coming out, and that was just stimulus one. We have no idea, and I think there's going to be a significant amount when it comes to the stimulus that Biden and his administration are going to inject into the economy. I think we're setting up for a lot more stimulus, a lot more debasement and devaluation of the dollar that's going to be significantly bullish for gold, blasting through these dates and timelines that Mr. Dent is talking about. But
it does not want to see deflation, okay? So when deflation sets in, like when Lehman Brothers hit in mid-2008, gold suddenly went down 33%, silver 50%. It was not the safe haven in the GFC.
They were selling that gold and silver, as you know, and as even all the financial institutions have reported. They had to cover their losses, cover their margins. Those institutions were losing money in the mortgage-backed security crisis. The equity market was being destroyed. So what did they do? They had to sell gold and silver because it was really the only liquid asset, the only thing they had of value, and they had to sell it to make their books look better. That is why they dumped gold and silver back then.
It will not be the safe haven in this downturn either, because this downturn is going to see deflation. That's what's going to drive gold to $1,000, give or take. But it goes up because it's not going to see that deflation early on. It's just going to see, more money printing.
Yeah. I wonder, though, I mean, if you think, well, you're right, gold is nearly perfectly correlated with inflation.
Unbelievably correlated.
95%,
look at that chart.
97% correlation with the TIPS index. Now, if you think inflation will eventually pick up, why wouldn't the stock market pick up along with inflation?
No, I mean, we may get just a teeny from all this money printing. No, the downturn always takes inflation down. I'm talking a really big downturn that will take us into negative inflation. We only touched that in 2008. Why? What did they do? People don't understand. All this money printing is not to create inflation. It's to fight deflation. And they want to get 2% inflation just to fight. It's only been fighting deflation. When deflation comes back in, there's going to be a point where they can't print enough money. And this has happened in the past. They can't print enough money because what I tell people, the central bankers, unknowingly, by goosing up financial assets, remember the number, 500 trillion, 6 times global GDP, overinflated financial assets, they've created a monster that they cannot control. When the smart money and investors decide this ain't working no more, there ain't no amount of money they can print to stop that. That will take, remember the number I said, minimum $200 trillion in real wealth and money out of the economy globally, and you will never see inflation for a long time. It'll come back slowly in the next boom. You're not going to have to worry about inflation in a year or two from now.
That's going to cause a significant disruption. If those hundreds of trillions he's talking about leaves the economy, it starts getting shifted around, well, we'll see. We'll see.
One more point. The Dow-Gold ratio is something I've heard from some prominent economists.
Money printer go burr.
The argument here is that in the past we have seen periods when the Dow-to-Gold ratio was 1. Now, right now, 30,000 points is in the Dow. Let's just round up gold to $2,000. Make it a nice round number. Yeah. So some quick maths in my head. That's a ratio of 30,000 to 2015. So 15 to 1 is a big gain. Do you subscribe to that theory?
Well, I would in ordinary times if we were not going from the greatest bubble in history into a deflationary reset, okay? And it's hard to judge gold on this because in the 30s, they controlled the price of gold. They confiscated and controlled the price of it. So you can't say, oh, what did gold do in the 1930s? I'm telling you, if gold had been free trading in the early 30s, it would have crashed. And so this is a temporary thing. long-term gold will return to inflation. Long-term gold will definitely boom with the next commodity cycle. I think the next commodity cycle, David.
I'm going to go ahead and disagree with him on if gold had free traded in the 30s and FDR didn't confiscate it, it would have crashed. I think the reason FDR confiscated it is because he knew people were going to hoard it. That's the reason. And they knew the price was going to go up because people were going to lose faith in the dollar, and they needed to take the gold out of circulation. So what did they do immediately afterwards? They revalued it. And of course, they did cause inflation. They destroyed the purchasing power of the dollar by over 60% by revaluing gold from $20.67 an ounce to $35 an ounce. That's the reason the federal government confiscated gold and controlled the gold price, and then prohibited people from ownership of or having it and possessing gold or gold certificates until 1974. So again, a little bit of
overall, with
skewed
gold
view
being
there.
a leader in the precious metals, may be the strongest in history, because emerging countries, which are going to be driving this next boom, Asia, Middle East, and Africa, consume a lot more commodities as a percentage of their income than they do, capital goods and things and stuff. So I think gold is going to do well long term. This is a reset for gold. I have to remind gold bugs, because gold bugs, like Peter Schiff, talk about, all these bubbles, it's all artificial. I'm like, Peter, gold went from 250 to 1934 in 10 years, and went from 450 to 1934 in 6 years. That's as big as any stock bubble we've had. Gold bubbled with this as well.
It's not a bubble, Dent, because nobody's buying it. Nobody owns it. Less than one. Everyone's buying stocks. I know everyone and their brother, their cousin, and their mother's brother's cousin, and everyone and their dog is buying Tesla. They're buying Apple. They're buying Amazon. That's all they all talk about. Nobody owns gold. Remember the statistics. Remember the numbers. Less than 1% of any American has ever held any gold that's not in the form of jewelry. Nobody you know or talk to outside of this chat owns or possesses a single bullion coin. They don't even have a gold coin. That's not a bubble. A bubble's when everybody's doing it, not when less than 1% are doing it. Look at the trading volume. Look at the market cap, Harry Dent. Do I need to go back to our market cap? Okay, the last stimulus was over $3 trillion, right? Am I wrong? No, it was about $3 trillion. They're going to do more. They're going to keep doing it. They're doing $27 billion a day they're pumping into the financial system from the Fed. Quantitative easing infinity. The entire market cap of all of the gold ever mined that exists in physical form since the beginning of time is only approximately $7 trillion. So you mean to tell me the United States government just printed off and sent out there into the economy 50% or more of the entire circulating amount of all physical gold ever mined since the beginning of time? And now we know that about 90% of all gold on this planet has already been extracted. That does not, to me, sound like a bubble. 27 trillion in debt, hundreds of trillions in outstanding liabilities, a derivative market that's in the quadrillions, with an entire global and world economy about to collapse and implode, with hundreds and hundreds of trillions of dollars about to be written off. No, this is setting up to where gold and silver and this is why there's different opinions. You look at Robert Kiyosaki as almost a diametrically opposed position on this trade that Dent has. He knows a little bit, but he knows almost just enough to be very dangerous and scary when it comes to his perspective of where things are going. He's absolutely, again, this guy is calling for gold to hit 1,000. He's never made an accurate gold call that I know of.
Gold is a financial asset in most people's mind, and it correlates with inflation. But again, the mistake here is that everybody, particularly gold bugs, keep thinking escalating money printing is going to create more and more inflation. And what do we have? I just debated Peter Schiff. I said, look at this, all this 10 years of 24 trillion of money printing, and inflation still sitting between 1.2 and 1.5%, and it's near zero in Japan and 1% in Europe. There is no inflation. It's just offsetting deflation. You cannot create significant inflation, and therefore that's a reset for gold. Gold investors keep assuming we're going to get inflation one of the days from all this money printing, and gold's going to go to 5,000. I am going to predict today, and you can send me out of town on tar and feather, gold will not see 5,000 until at least 2038, if it sees it then, and gold is going to have to get that there is not going to come, this is not going to be an inflationary crisis, it's going to be a deflationary crisis. When it sees that, like June 2008, gold said, oops, we've been going up in this crisis, down 33% in a couple of months, silver down 50%. That's when gold and silver got reality. Oops, deflationary crisis, but they got saved by the Fed jumping in, central banks, and printing trillions of dollars. That looked like inflation again.
Harry, last question. If you think that the stocks are going to go down, we're going to see a crash, if you think that gold will first hit, around $1,000 before going back up, what do you like, Ben? What are the assets that you would invest in right now?
Okay, right now it's very simple. And I studied the Great Depression and I kept saying, well, something must have gone up. Cigarettes, alcohol, booze, toilet paper, consumer staples, No, just a lot of the stock market is price earnings collapse, not just slowdown. You can have industries that maybe don't grow, but don't lose sales, but they still go down in value because overall people see risk. So what I like and what did well, only thing that did well in the 30s depression, particularly the 29 to 32 crash, highest quality bonds. You know what that is?
Oh my God.
Things gold bugs tell you to run from. U.S. long-term treasury bonds. I am predicting in a crash where stocks could go down 70 to 90% in the next 2 years, 30-year, the longest duration U.S. Treasury bond, which is only yielding about a 1.5% right now, will go up 30 to 40% in value. You just sit in the safest investment, the one thing the U.S. government will pay off above anything else because they can't afford to lose their credit rating, even in a downturn, U.S. Treasury bonds, and only the AAA corporates. Those are the only two things that survived the 29 to 32 crash, went up a bit in value, and did well for the whole 1930s deflationary period. So that's it. But now I say you just do that. You get in cash I like apartment rental REITs that focus on affordable apartments. I like REITs that focus on medical care facilities, hospitals, because the baby boomers are still in a strong cycle for that in their late ages. So those things are good. But outside of that, I want to get safe and then reinvest like Joseph Kennedy. What did Joseph Kennedy do? Got out at the top, bought stocks when they were down. Now, remember this number, 89%, not small caps, not junk stocks, blue chip, the best companies, RCA, Ford, General Motors, AT&T. The fangs of that era went down 89%. Then you buy them. Then I buy stocks. Then I buy gold and commodities. And I would get out of those safe bonds. And you know what else I buy at the bottom here? I buy junk bonds. They're going to have very high yields, expecting endless defaults. And those yields are going to come down even though inflation comes back modestly. Junk bonds will be a steal in late 2022. Right now, you just got to be safe and play the deflation plays. And there aren't many. High quality bonds, cash, rental, REITs that focus on rentals for apartments, which people have to have, and medical facilities. That's about it.
All right, Harry, thanks a lot for your time. Now, where can people learn more about your work?
Oh my goodness. This guy just told you guys to dump your gold because it's going to 1,000, and he told you to buy bonds. So there you go. That's Harry Dent. I mean, I knew the guy was crazy, but he has a tremendous amount of faith in the United States government, as you just heard, because they're not going to let their credit rating go down. They can't. They just wouldn't do that. It's never happened before. He's definitely a boomer stricken with the normalcy bias. He's never experienced it, thus it can never happen. He just said that gold will not see $5,000 an ounce until 2030, what do you say, 2033, 2030? So that's his call. He believes that gold's going to plummet to 1,000. We're gonna hold on to this. I might even remind you of this in every video in the year 2021 as we watch gold make some bullish gains. That Dent in the Head Harry believes that gold is plummeting back to $1,000 an ounce. Now, he did say it's going to hit 2,200 again, but then he said it's going to retreat from there. So if we breach 2,200 again and go past it and continue climbing, boom, he traded wrong, and he's wrong there. So let's just keep our eyes on this as we continue forward going into 2021. I can't believe it's almost, can you guys believe it? It's almost the new year. We're almost a month away. It seems like yesterday. It really does. I can't believe I'm sitting here talking to you. It seems like yesterday that we were doing the New Year's videos and looking at gold forecasts for the year 2020. Little did we know what this year would look like. Unbelievable. Unbelievable. Remember the gold calls that we had in early part coming into this year, in the close of 2019, when we came into 2020, and when we were looking at what was going to take place, what was going to happen this year, those calls. It was much different times, and we're actually right now sitting here talking, we're above any of those calls still. So that's the Harry Dent episode I wanted to share with you guys today. The gold bear that came out of his cave, or did he? We talked about Turkey. We talked about all of that. So that was really it. We'll check in. Let's go close out and check on gold price trading, 1767, so it's below the 1770 mark here. Down in overseas overnight trading about 1.15%. We'll have to see it. It's taking a little bit of a plunge here now, ladies and gentlemen. You can see this little wick here. A little bit of volume down there. Look at this. It's a deep plunge hitting down in the 1760 range. So keep your eye on gold tomorrow. Silver's down at 21.94, down 3.26% right now. As you can see, silver. Let's take a look at silver's chart. There we go. There's silver's chart. Zoom out a little bit. There's where it plunged down. Let's go back. Let's do a hours. There's your silver chart. Came way down off those highs. Almost, back when we almost kissed 28 bucks an ounce, up in the 27 range. Here's $28 an ounce down here. We're down $7 from that range. So, yeah. Silver's rapidly trading right now, sitting below $22 at $21.90. So you guys might want to get your trucks ready. Who's got a Peterbilt they'd like to loan out? Big flatbed trailer. We can put some big Comex bars on, the 5,000 ounce kind. Alrighty. I hope you guys enjoyed tonight's video, tonight's discussion. And as I promised, we will go to the comments. Let's go to the comments real quick. Let's go back to the 1 minute candles on silver. And you can watch it trading as we discuss things here. I'll zoom in for you. Go like this. Alright. Let's see. I'm now looking at the comments finally. Pardon me. I know that you guys were having your own little kicks in there, and it was rapidly scrolling by. I could tell you guys were having a lively conversation and commenting on what was being discussed. But let's go. Who's got something they would like to share and discuss? Might sell some crypto and back up. The silver truck says Silver Slave 333. That sounds like a possible trade option for you. Depends which way it goes. DW says, I wish I had some dry powder to back up the truck. Silver Maple says, silver is down because everyone is broke and the big guys are closing out all their shorts. Physics Hypernova, I sent you an email earlier about the further downfall of the science and reason. I will take a look at that, my friend. Thank you for the email. Thank you for the contact and information always. Biplav Shristha says, over for gold. And he says, Bitcoin is the future. I don't agree, although I do believe both are going to be bullish going forward. I don't agree that it's over for gold, my friend. 10,000 years. It's a pretty significant resume. From Above says, what do you think about the gold Philharmonic versus the gold eagle? I'll tell you, I do not like gold Philharmonics. I don't like how thin they are. I don't even like the design of the coin that much. I do happen to like and prefer the gold eagle over the Philharmonic. That's just me, though. That's my own personal preference. Silver 50% higher by year end, says Silver Slave 333. So you're saying about $42 silver by the year's end of 2021 or by this year? You might have to clarify because we're still in 2020. Are you saying by New Year's of this year 50% higher? Well, let me know what you think, what your call is there. Bill Spencer, Ponzi Bucks Index barely holding 91.7 weird. Yep. Maybe end of January, says Silver Slave. End of January. Okay, that's a pretty big jump there. We'll see what takes place. No system which is centralized will survive. I agree, Fanta Naranja. It's never over for precious metals. Absolutely. They're essentially is eternal. Buffaloes are amazing. So, Zaz Tarak PHE says 24 karat beautiful buffaloes, silver eagles. Yeah, I do agree that the buffalo is a remarkable gold coin. The fills they're too big of a diameter, and I believe they're struck too thin. I just do not like the dimensions. I like a thicker coin. My favorite dimensions, honestly, is like the high relief. I like a thick, squat coin. I like a smaller diameter and a thicker coin. They just look better. They feel better. Carlos Danger says Philharmonics look like hell. I think they do. I agree. I'm not a big fan of them at all. Not a fan of the Philharmonics. All right. What do you think of the Canadian Maple Leaf? Good coin. Like it. It's actually I like the silver Maple Leafs because I like the old ones especially because they were thicker. I like when I was a kid. Believe it or not, I had an affinity for Maple Leafs because it was a thicker coin. They were a smaller diameter than the Silver Eagles, and they just had a thicker edge. JM, can you recommend where to buy from? Thanks. I've got a lot of videos on that SB Tucson. I've got some videos on where to buy and where not to buy gold and silver. I like JM Bullion, SD Bullion. I like APMEX. All good places there. Let's see. Happy Thanksgiving, Johnny NY. Thank you. Same to you. Happy Thanksgiving to all in the Junius Malpe chat side margins there. All right. Anything else? Did we miss anything? Let's see. Just waiting. I think we'll call it for the evening here. We did some good discussion. We broadcast for a while. It went a little bit longer than I thought we would. But that's it for the night, I believe. I'm going to call it. I'm going to let you guys go. Let you all buckle up and go to bed. And if you really miss my voice that much, put on an oldie. Put on one of the oldies. Go into the gold playlist. Find yourself something there and just tune out and go to sleep, and I'll drone on about gold. Perhaps the old video, Ideology of Saving in Precious Metals, give you a little bit of a reminder. Again, I think we're in a strong spot. I think we're doing good, honestly. I really do. I got a lot of faith and hope in it. I think that video that we just watched and that discussion with Mr. Dent and the Head Harry, I'm actually very excited to see gold and silver this next year. His undying faith in U.S. bonds, his faith in the United States is laughable. It's staggering. And the fact that he actually said there is no inflation. Now, I'm up there in age. I'm a little bit senile sometimes, so please remind me of his quotes. Maybe some of you can write down, if you want to do some really cool homework for me, write down his most outlandish calls in that video. Some of the worst ones. Some of the things that he said that we're just going to have to come back to and point to in the future as being absolutely false. His call like there is no inflation. His call that gold's going to hit 1,000 next year. All of that. It's going to be entertainment for us for years to come. So with that being said, oh my goodness, I just saw Lord Humongous say, I'm going to go watch some Dave Ramsey now. That's like comic relief. Go watch the one on Mr. Ramsey's Wrong on Gold. It's on the Junius Malpe channel. You'll find it. It's somewhere in there, my friend. All right. You guys have a good night. Be well. All of you take care of yourselves. Keep stacking. Take advantage of this. 1766 on gold. 2194 on silver. Got some good moves taking place there. And, ooh, there we go. You see that plunge? Boom, look at this. Look at this trading taking place. It's all over the place. It's moving. It's going to be an exciting day tomorrow, I think. A lot of volume right now. Some rapid price changes overnight. We'll see what America does when they wake up in the morning when they see $21 silver. You guys might want to log in and lock in some prices with some of the metals dealers. Let me know. Snag some prices. All right, you guys keep stacking. And take care of yourselves, my friends. Have a great night.